Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a look on the gold market. Here is also we have not really fast performance. Maybe market just wait for the CPI numbers and see what will happen, but more probable that nobody is hurrying to take the position in any market, actually, not only on the gold, just because of the big uncertainty concerning the debt sale. Now already speeches are coming concerning the 14th Amendment that Joe Biden could use to increase the debt sale without the Congress participation. This is a really bad idea. This will be not really good for the image of the United States and as the image of the safe haven assets, and that might hurt the overall confidence in the United States government, and the debt definitely will be and clearly shows the political crisis that stands inside the United States. This will be not a good sign. But meantime, investors just considering the United States dollar, thinking, and I think that just demand for the dollar stands just because most traders think that in some way debt sale will be increased. And in a period of uncertainty, when a debt sale will be increased, whatever uncertainty will be, dollar should remain as a safe haven assets. And you can see that in the Forex market today, we talked about this, and right here, you can see that investors actually do not let gold to just reestablish the upper direction show of the rally. In the case of the default, of course, the picture will be different. At the same time, I wouldn't overestimate the downside potential of this action. I don't think that it will be some really outstanding downside drop or something of that sort. As we said, in our weekly report, we suggest that market should remain somewhere in 1950, 2050 area. So in this range, we're not suggesting any significant collapses on the gold market anytime soon because of the whole fundamental background that we discussed in the weekly report. But at the same time, some deeper action, some kind of even A, B, C, D performance here could happen. So on the 4-hour time frame chart, yesterday we talked about the possible taking the short position around this area in the market we're standing, and we said, well, potentially it might be the A, B, C, D. But if market will climb somewhere back to the 2050 area, well, it will be not as good for bearish performance. Maybe overall context could remain, I mean the bearish on the bearish side, but it will be not as attractive for taking the short position. Currently you could see that gold is turning down, and in general, if you take a look at the overall performance here, it's definitely not this type of action. It's gradual in the shape of the minor ABCD, and we yesterday also discussed kind of the cartridge type to sell that we're getting standing in place. If downward action indeed will continue as we suggest, so next target will be somewhere around 1985. So XOP with the same ABCD pattern, which is actually still stands well, it could be achieved. Speaking on the intraday levels on the hourly chart, yesterday we said that might happen around the confluence 2030 area that we talked about, but market was able to climb slightly higher to touch the COP target. So here we have the ABCD COP once has been reached. Market now is turning down. Next potential, as we said, might be around 2050, which will be the OP and the AB equals CD destination point. Well, at the current moment, I do not see that market indeed is interesting by the touching of the OP, so it really could reach it. If you intend to take the short position, maybe you could initially place the stop somewhere above the 2050 just for some case. Once it starts dropping, then move stops to the break even or just tied it back to the above the top. But initially, maybe you could try to place it if you're not scaring with the common CPI numbers today, volatility that could happen. Overall context remains bearish here. Price action is slow, CD leg is slower than the AB, would not have any thrusting action, and definitely here we have the features of the retracement. Guard steeple to stands in place, so most of the picture is bearish and suggests downside continuation. That's why in the current moment we do not consider taking any long position by FI and prefer to see what the result will be of this current action that we have. That's actually our view on the gold.